the last day of the trading week, and Peter Kinsella of Commerzbank is on the phone with me now for a pound sterling themed Targets in Focus interview. Peter, it's been a distinctly UK heavy data week on the calendar. How has the pound held up?
It's been kind of interesting. What you've seen is that the pound has weakened a little bit, and that's mainly on a reflection of a slightly lower CPI print. So as a result, many sort of market participants started to price in, let's say, a little bit more of an expansionary BOE, and with that you've seen the pound weaken a little bit on a trade-weighted basis. Against the dollar, you've seen the cable move from around 150 towards where we are now, 150, 130. But that's mainly a reflection of sort of a little bit of dollar weakness post-Bernanke. So all in all, the pound hasn't done an awful lot. It's lost a little bit of ground, but certainly nothing substantial over the week.
The cable experienced a bounce this week following mixed US reports, with investors remaining cautious over Mr. Bernanke's comments that the US central bank could begin tapering its bond buying program. How long is this break in the downtrend likely to last?
I don't think it's likely to last all that long, frankly speaking. What you're seeing here really is the start of a broader dollar rally. And what we've seen in the last, let's say, even in the last 10 or 15 years, is that you've seen two periods of dollar demand, but we haven't really seen a period of concerted dollar strength. And there have been good reasons for that. Obviously, you've seen a very, very significant current account deficit. You've seen, obviously, large budget deficits, but that's starting to correct in large scale in the US. So what you're starting to see is a nascent sort of turn of a very, very bullish dollar environment. And really what Bernanke said this week was that they would consider tapering QE3 volumes or certainly continue, let's say, tapering the actual extent of QE3, possibly within 3 or 4 months. And really, you have to remember that the dollar is trading at a depressed level, and indeed it's sort of artificially depressed, mainly because of the extent of previous and ongoing QE. So once the central bank indicate that QE is more or less at an end, you can expect the dollar to begin rallying, and indeed that's what you're going to see. So this sort of little pause that we've seen in this is exactly that. It's a pause, and I don't expect it to last all that long, frankly speaking.
In today's trading, the euro-pound edged higher ahead of the release of Germany's IFO, with the IMF's comments that the UK is a long way from a strong and stable recovery, damaging UK confidence. Is this pair being carried by current euro strength? What are your pricing forecasts in the short, mid and long term for this pair?
I think there's two things really. If the IMF were to do a sort of commentary about the Eurozone, you would find it would have a lot more negative things to say about the Eurozone rather than the UK. In fact, on most of the aggregates that I look at, certainly the UK is outperforming the Eurozone, and with good reason. You only have to look at relative unemployment differentials to tell that one country is actually experiencing better GDP growth than the other. But more to the point, the question really from here is, okay, well, what are the respective central banks going to do? You've seen, obviously, the BOE have engaged in a pretty aggressive quantitative easing policy over the last 3 or 4 years. And that's pretty much run out of road in terms of its usefulness. So, for example, further gilt purchases at the present won't really do an awful lot. And that's why sort of incoming Governor Carney has spoken about, let's say, a policy based upon more forward guidance. That is sort of, let's say, trying to influence sort of, big ticket spending items just on the basis of saying we're going to hold rates low for a very, very long time. If you look at things in the Eurozone, however, it's clear that the worsening sort of economic situation basically means that you're going to have to see a combination of looser fiscal policy and looser monetary policy. Like, given that there's not an awful lot of scope for sort of looser fiscal policy, that means that obviously the European Central Bank are going to have to do a lot more on the monetary policy side. So in our view, that means they're going to cut the refi rate again by 25 basis points, bringing it down towards sort of 25 bips in total. And then also they're going to have to probably consider implementing sort of negative deposit rates, and that more than anything else will lead to lower euro sterling rates over the coming sort of months and quarters, with the result that I won't be surprised if we're looking at sort of euro sterling towards the end of the year in and around sort of 83 or 82.
The pound yen has tested several levels this week in response to UK data. Next week's diary is dominated by releases from Japan. How do you see this pair performing both next week and into the future?
I think there's definitely a possibility of a correction next week, given sort of you've got a lot of Japanese data, and the most recent Japanese data, certainly this week, that caused sort of the downtrend in the Nikkei and obviously the downtrend in dollar yen, has been sort of relatively this portfolio sort of diversification that we've seen, where Japanese investors were actually repatriating funds back to Japan, which was strange because many people expected the reverse to happen. And what we're going to see next week most likely is a potential for sort of, again, a little bit more of an unwind of this. So, many people got long dollar yen and long cross yen in general, in the expectation of sort of this massive easing by the BOJ. Now, that's the correct trade to have on. There's no doubt about that. And I mean, further yen easing or further BOJ easing is going to lead to a significantly weaker yen over the medium to longer term. There's absolutely no doubt about that whatsoever. The only question is, in the short term, from an investor's point of view, is, okay, do you get short yen now, or do you try and buy a dip? My own view is that we'll probably see a little bit of a correction next week, so we might see sort of sterling yen a little bit lower. But to my mind, that let's say the path is very much open and very clear that we're going to see a significantly weaker yen in the months and years ahead.
That's all we've got time for, but thank you, Peter, for your comments and insight into the pound pairs. For market analysis on all your major currency pairs, stay tuned to Dukascopy TV.